So what do we got right now? I'll tell you what we have. We have a mess here, an absolute mess of this market. This is, let's see, since February, let's see, February 17th, 18th, there about that date, a sideways market started. The uptrend stopped, and this market has butchered anyone that was trend trading, including myself. So I made an estimate in mid-May to say, okay, um, we are right about to, I think it was around May 11th, we are right about to experience a correction. And I used Elliott wave analysis, and I said if we break below this level in this triangle, which is highlighted with this circle here, if we break below that level, expect a new downtrend to start. It broke through that level, had a couple corrections back to the upside, and then in one big day on June 1st, all the markets went down over 2%. Remember when the Dow Jones went down about, I think it was 284 points in one day on high volume. Since then, we've had down day after down day after down day, and today the S&P goes down another 1%. The Dow was showing some strength, but still, I'm really not caring about that. Um, I like to see more than one average confirm, but perhaps it was just one stock that had a lot of strength today that influenced the average. So what are we looking at? We still have a target of 1250 in the S&P 500 right there, and maybe a point or two above, but 1250 is our short-term target. I expect it to get there, probably by the end of next week. That being said, our SDS position, which is an ultra short ETF for the S&P 500. Oh boy, see if I can get any better view of that. Here. There we go. Alright, I was saying that we had a symmetrical triangle going on a while ago. It was, see, symmetrical triangle somewhat. And our breakout was in mid-May. And I'll get rid of that again, not to confuse you. So our target at that point was 2175 in the S&P 500, which was that level there. It was broken through today. So what do we do now? We just wait for the S&P 500 to confirm and tell us. We just wait until the S&P 500 hits that 1250 level. When it hits 1250, I highly recommend getting out of the position. You'll lock in probably around a 10-12% profit. All right, next up, TNH. And everything I say is all repeated in the blog post. I'm just doing this for those who would rather have the information spoon-fed to them. This one has really been a darling for us. After dividends, which the stock gives us a 15.7% dividend. If you bought it when I told you, it'd be a 16.5% dividend a year. We're up nearly 9% on this stock. And it really seems disconnected from the overall market, because what happened again in May with the S&P? It topped out. What happened to TNH? It kept going up. It's been disconnected with this market. It just keeps going up. So, therefore, what do I think? Let it alone. Just let it do what it wants to do. If you really are shaky when it comes to keeping your profits, you could always place a stop order and say, okay, if it closes beneath, say, 120 bucks, I'll get out. Or if you can handle a little extra risk, you can say, okay, if it closes beneath, let's see, what's this number? You could do 117.50 or 115, all depending on your own risk tolerance. You can get out then with a profit. No matter what, we are going to make money on this trade. Simple as that. I like it when trades go my way. So don't do anything with TNH. Finally, JEF. This one's been really interesting to me. See this area right here? Like, I shorted at 22.65, which, thank goodness, it was excellent execution. And it went down, it went down, it went down, but what's this? Falling wedge. It's horrible. It's not reliable at all when it when it doesn't break out, but after it breaks out, it is pretty reliable. This is traditionally a bullish pattern, so we would generally expect it to, see if I got a hot pink line right here, we generally expect it to go straight up after it break out. But it often also breaks to the downside. Our target is $20, which that's near the apex. But what happens, and our time target is around June 20th. What happens on June 20th? See this little dollar sign up here? Earnings. Therefore, earnings will produce, according to this falling wedge, according to our pattern, it is going to produce a major move. I don't know whether it's going to be to the upside, to the downside. Jeffrey's earning history is mediocre, so you need to keep an eye on this. I'd recommend either toward earnings, buying a call option to protect your short position, or exiting near the day before. All right? So that's what I think right now. We're still going to be light on the positions until a new trend is established. If I see any darlings that we might want to trade, I'll post them. Thanks for watching. If you have any questions, post in the comment box or email me at tradersbase@live.com.